seen a few times in 75 years. ServiceNow CEO Bill McDermott echoed that on our air yesterday. And billionaire hedge fund manager Steve Cohen reportedly said investors may be missing a big AI wave of opportunity by being too focused on recession odds. Goldman Sachs says AI could push up S&P profits by 30% and boost U.S. net profit margins by nearly 4 full points over the next decade. And one of my next guests calls these numbers too conservative. The other says they're too far-fetched. Joining me now is Annex Wealth Management Chief Economist Brian Jacobson here on set with me, along with Keith Fitz-Gerald, principal at the Fitz-Gerald Group. And Keith, you're the one who thinks this is for real, and maybe we're underestimating how big an impact it'll have.
I think it's not only being underestimated, but most investors are simply not aware of the magnitude of what we're talking about. We're talking about something that parallels the invention of electricity, the invention and introduction of antibiotics, something that will change the course of human history. I think the Goldman numbers are an order of magnitude low, and in fact, every company is going to adopt or use AI in the next 10 years, and profits are going to follow.
So, funnily enough, for those kind of claims, I'm not sure many people would disagree with you. Where everyone disagrees is what it means for the stocks that are affected. You know, when you see anyone who mentions AI, the stock gets a bounce. You know, the AI ticker is up double this year. I don't know. It just we're reaching the point at which, you know, the hype's going to overtake everything and maybe drive things to silly levels.
Well, respectfully, that's always a risk, right? I mean, it's going to be like .com 22 years ago. Whenever you put .com after you got pets.com, you got talking socks, ridiculously stupid Super Bowl commercials. There's going to be a degree of hype that comes with anything that's invented new. It was the same when we transitioned from silent movies to talkies. That is going to be very real over the next 6 to 12 months. But if you look out beyond that, if you look at the longer historical record and the introduction of technology, we have two things now that we didn't have. We have speed and adoption and breadth. And we've got billions of people carrying devices just like this one, which means that it is going to be in your life immediately within seconds when it takes effect.
Quick final one before I want to bring Brian in here. But given all of that, you own what? You buy what? I mean, what doesn't have this priced in already? What's the basket for something that we're really just now building out?
I think you go with the big names that have got the cash flow stability and development capacity. To me, this is going to be companies like Apple. It's going to be companies like Tesla. It's going to be companies like Palantir. I own all three.
Keith, Sam Lessin today said that we might be at the Napster moment of AI. And I think a lot of people would share that view. And we'd also go, you know, no one looks back and thinks, man, I really missed out on that Napster investment.
Well, I tell you what, betting against any of this stuff today, you might as well be betting against Steve Jobs back in the day. I don't know that anybody I've ever heard has said, I regret buying Apple. I regret buying Microsoft. I regret buying some of these companies. If you're talking short term, and to my guess, very, very valid point, you've got to have margin protection and flexibility. We share that view on a longer term investment, balanced approach. But in terms of AI, you've got to be ahead of this. Buy low, sell high. These stocks are going to be dirt cheap a couple years in the rearview mirror.
Do you think, Brian, that we have at least pushed off the recession by a couple of months? I mean, literally because of this, because of all the investment that's happening and the business transformation, even the higher. I mean, everybody who's been cast aside by other parts of the tech world for the past couple of years at least has an opportunity in AI to be redeployed. And did that, you know, help us out in a big way there?
Sadly, no, I don't think so. Because a lot of the people, when we saw the layoffs, did they actually have the skill sets necessary to pivot towards AI? Or were they more focused on other projects? And then in terms of the investment, we're just not seeing that in terms of capital investment from businesses. So that's where you do have to take that longer term view. So I don't think it's done anything to really stave off the current recession. And in fact, I think we've gone through a recession already. You know, if you think about Q4 2021 to Q4 2022, the earnings drop for the S&P 500 on a quarterly basis was more than 26%. We already had an earnings recession.
I see Keith agreeing. So even though you disagree about maybe how to invest around AI, you agree that maybe that has already taken place. Gentlemen, thank you, Keith Fitz-Gerald and Brian Jacobson.
Hi, it's Keith here. Thanks for checking out today's highlight clip. What'd you think? Did I make sense? Is there something you'd like to add? Make sure you leave a comment down below. And of course, click subscribe to keep up right here on YouTube, or sign up for the email newsletter at the link below. You can also find me on Twitter and Instagram for my real-time thoughts on markets, analysis, and a whole lot more.